Okay, so our first speaker on day 2. And I wrote this morning. I wrote, someone didn't sleep very well last night. Someone was deep diving into the latest Macquarie benchmarking reports. Someone was updating spreadsheets. Someone was analysing company profit and losses and reading about the newest tech platform that's going to revolutionise real estate.
Workspace.
That's a shameless plug, Manos. The truth is that someone wasn't me. I slept really well last night. Let's get cracking. Day 2 with Manos Findikakis.
No mic. Mike.
1, 2, 3. 1, 2, 3. Sorry? No. I'm into Excel spreadsheets. Okay. Let's go back to here. Yeah, so coming back to day 2, obviously day 1 is full of information, full of what is it that we're going to take action on. And again, I always say to our team members, what we need to be doing is putting in that 3 to 4, 5, 6 months of grind to totally understand your business, and then it just becomes easier. So what I'm going to be sharing with you today is a whole bunch of strategies that we've implemented over 20 years ago in every business. And it's not like I do sleep, and go to bed with an Excel spreadsheet. It's not the case, and that's the last thing we want business owners to be doing, because you need to learn the strategies, and it's just like driving a car. It needs to become automatic. Like it just automatically, when we talk about break-even points, when we talk about your profit and loss. So today's session, over 30 minutes, we're going to be talking about benchmarking your business to identify clear starting points for growth. Track performance with key metrics to drive data-informed decisions, and optimize operations to enhance client relationships and scale sustainably. Let's start with the first one. Benchmarking. It's a great concept in regards to comparing ourselves to what the industry average is doing, what the others in the industry are doing. But one thing that I've really learned in business is that numbers help us predict the future. There is a predictability about numbers that when you do a certain amount of actions over and over and over, we'll get a predicted outcome. What's the most important outcome or key metric that we need to use in our business from a sales agent point of view? Jed? Market appraisals. That's the number one magic number, isn't it? So in business, we need to have the same sort of metric and look at what is our metric that we need to be using. And so everyone has heard me say, those who know us, volume is vanity and profit is sanity. And a lot of people look at running a business and we get excited, especially in real estate, about doing the numbers, about achieving a certain target in the number, $1 million, $2 million, getting our business to $5 million. And it was fantastic on the panels yesterday when Josh Morrissey, how great was Josh Morrissey? It was absolutely phenomenal, as all of the speakers were. But Josh said something really important. He goes, I went from $4 million GCI as a sales agent, dropping it down to $2 million. And then what did he say? When we talked about profit. Yes, exactly. And he also said to replace that profit, he needed to do what as a sales agent? In sales agent turnover. Do anyone remember the number? 6 million. 6 million to replace that $2 million of profit that he was writing. That was fundamental because he understood his business. He understood where the money is coming from. So profit and cash flow is is totally relevant to your business and the way you structure it. There is not one size fits all. And we're going to go through the metrics of the Macquarie analysis, that just a few things that they've done. But I want you to understand it may not relate to your business, but it's a good starting point. The other thing that we need to talk about is debt and risk. And what I've found in my 40 years of being in business, debt and risk is a critical factor in how we perform in business. So if this goes back to DNA. So whilst volume and vanity and profit is sanity, he talks about obviously your numbers as a P&L and how much profit you make. We need to understand that our mental capacity, our DNA, the way we look at debt and risk, actually has a massive influence on our business. If you have debt in your business and you don't cope well with debt, it's going to affect your performance as a business owner. And also, it'll affect the type of decisions you make. And the big one is, are you going to be coming from a place of scarcity, or will you be coming from a place of abundance? So it's just not about the numbers. It's not about that bottom line that Excel spreadsheet or your Xero or your MYOB is going to produce. Really look at it from an emotional point of view. And of course, team and client retention and sustainability and longevity. This is totally connected to your profit. Totally connected to your profit. And we'll talk about the 1649 rule a little bit later. And if there was anything that you take away from today, it was the 1649 rule. Okay. So let's just talk about the Macquarie Business Insight Snapshot. There's a report that just came out at the end of the financial year of 23-24 financial year. And they've studied 414 agencies across Australia with an average PM portfolio of 662. Now, from all over Australia, every state and territory. And I can tell you, as soon as I saw this report and they said that, I said, okay, this is going to be interesting. Last year's report actually had state by state by state, which was much more fundamental. But this was an average across the whole spectrum. They talk about revenue growth and a comparison on the 5 years, and I really want people to really look at this chart. So financial year 20, those same 414 agencies on average did just on $2 million worth of revenue. 1.2 on sales, 700 in property management, and the other 145,000. I don't know definitively, but the other I do believe is vendor paid advertising income that they receive. And obviously to me, that's a debit and credit. That should be just a pure debit and credit. It really shouldn't be on your balance, on your profit and loss statement. And the way that accountants look at profit and loss is totally different to the way a business owner needs to look at profit and loss. Totally different. And if you're waiting for your accountant to tell you you're in profit, it's too late. Absolutely too late. You need to know, and you need to sometimes correct your accountant, because your accountant's not in your business. They're not. They don't know the mechanics. They actually don't know where your profit is coming from. Right, within reason. There'll be some accountants that are really into, obviously, property, into real estate. So I am generalising there, but just be aware, do they actually know your business? So the big one here, revenues almost doubled. So that was an exciting time, 113% increase in 5 years. So you would think that from a profit point of view, would be exciting, but actually hasn't been. So these same 414 agencies, whilst they doubled in their revenue, their profit actually has gone backwards as a percentage. So from 19% down to just on 12.8%. So if you looked at those figures, approximately 392,000 for financial year 20, and then it's 562 for financial year 24. The interesting thing was most principals gave themselves a big pay rise, which is exciting. They went from 164,000 in financial year 23 to 200,000 in financial year 24. And I put that up deliberately because a lot of people, when we talk to business owners, they say, but I haven't made profit. I said, well, let's have a look at your business. How much are you taking as drawings? How much are you taking as personal income? Are you sharing it around with your family or the whole thing? And sometimes they actually say, I'm pulling out $500,000. And I say, well, okay, that's pretty exciting. So you can't tell me you made no profit. You actually made $500,000 because just tell me where you're going to leave real estate and who's going to employ you for $500,000. So you've got to put some perspective into it. But it's good to have a benchmark in there to say, okay, my services as a principal is $200,000. Okay. So there's been a profit decline on percentage of 33%. 33%. So what does that tell us? What do these numbers tell us? Can we get a mic to Jed? Yeah, thank you. And then one to Lou. What do these numbers tell us, Jed?
I'm just having a stab in the dark here, but I reckon it's property managers are getting paid a lot more and sales agents are on a better commission split.
100%. Absolutely right. The cost of doing business has increased. There's no question that the cost of doing business has certainly increased. Compliance has gone through the roof. And obviously legislation has affected.
Just on that though, when you look at, obviously, when your revenue goes up so high, you're going to need to put on more staff to cover the increase. Or, and is that right?
Beautiful question.
And so we look at a percentage, okay, but the overall profit number that you're making is a lot higher.
100%.
So how would you say that's not a good picture overall?
Because if there's a downward spiral, how far do you go down? It actually makes you harder. Now, here's the thing though. Financial year 20, can you remember what your average commission was? So when we started in real estate, back in 2006, it hasn't... Average commissions, my analysis of average commissions, the percentage has come down, the dollar value has dramatically increased. So when we started in real estate, average commission in our area was about $6,000, $5,900 odd dollars. It was 20 years ago, but fast forward to today, it's over $15,000. So it's actually 2.5 times. So when we look at these revenue numbers, sometimes we look at the revenue and we think of expenses. It's a really valid point to really look at that. We've got to look at sales transactions. Sales transactions. So Hill was up on stage yesterday, and he was doing over 200 transactions for his volume. And you had Josh Morrissey up on stage doing very similar volume at 60. So 200 transactions to 60, I'll tell you right now, 200 transactions from a bookkeeping point of view and from a transaction point of view and a client gift point of view has more expenses than a business that has 60. Chris?
Yeah, we saw a big difference in our cost of holding per listing because of days on market. So when we had in 2021 days on market were only about 16 versus it blew out in the Hunter Valley days on market to 77. So just in that gap, there was $500,000 worth of additional holding cost expense on each listing.
Yeah, 100%. So all these things. So the whole point when we analyse our business, we need to go granular. Now again, I'm not asking you every single week to spend 2-3 hours in front of a computer in an Excel spreadsheet and analysing this, but you need awareness. It's like when I talk about organising your break-even points and understanding where your profit centres are. You just need to do the exercise once. Get good at it's like driving a car, as I mentioned earlier on, which brings us to profit centres. To me, from a benchmarking point of view, we can look at the Macquarie report, because it's the only one that's really around in the industry that I know of. We can look at it as just a guide, but what we need to do is to really dig deep, and I mentioned it in May's session, the 3 profit centres. And the 3 profit centres in the business is the director's EBU. Who had a director's EBU yesterday? I mentioned his name. Yes, so there was Josh Morris who had a director's EBU. There was Ethan who had a director's EBU. There were director's EBUs up on stage most of the day yesterday. So understand and I call it a director's EBU, and I've separated it from a sales agent's EBU, a sales agent within a team, because I want the mindset to come through from business owners to understand the value that they bring to the business and how instrumental they are to the bottom line, and also longevity of your business. So director's EBU, structured correctly, and this session is not about training up and pulling apart a director's EBU, is critical for longevity in your business. Absolutely critical. And for profitability, unless you want to come off the tools totally, as Christine was talking about yesterday. Yep, perfect, Christine. Talking about yesterday, and obviously just managing those teams and working towards that. So as a director, you need to know what type of business you want. We run that model. So myself, Maria and Arthur, who run EV Real Estate Partners, we have 13 sales agents. We do not run a director's EBU. So we are relying on our 13 team members to bring in revenue to make sure that single entity outside of agent's agency is a profitable entity. And I'll tell you right now, if we were on the tools, we'd make a lot more money than having 13 sales agents within the organisation. So I'm not saying it's right or wrong, but choose the business that you want. And also the timing in your life, right? The timing in your life is so important. So as I mentioned yesterday, motivation, timing, destination. I came into real estate when Joel said he's 36 years of age. I said, I didn't get into it, I was 38. So my timeline with Joel is totally different, plus different life experiences beforehand. So there's not one size fits all. So it's really important, that question, and why I bring up this topic of, the benchmarking your business is understanding how profitable should you be? How much profit should I be making? And it all depends on these 3 centres. Directors EBU, sales agents, and more importantly, sales agents within EBUs, and of course, property management, and of course, affiliate partners. So we have Moving Hub in the house. You have your mortgage broker. We've got Money Cloud. You need to understand where those affiliates are available to you as well, because they may not affect the bottom line all that greatly, but it pays for a few holidays. Would you agree? Where's Moving Hub? Where's Chris? Not in the... Yeah, there he is. Go see him if you don't have an affiliate partner. Okay, so, but here's the thing too about this section, about this aspect. You need to create a P&L for each section of the business. You have to, right? Combining it all together and giving yourself a snapshot doesn't actually give you a clear picture of your operational efficiencies in your business.
On those numbers that you had before then, as the revenue continued to grow, did they give you figures of where their expenses grew, which parts of the business their expenses grew? Sales, property management?
So everyone can download this report. So go Google it, and the Macquarie Real Estate Insights, and it's about 20 pages long. So it's got all the details in there. What you'll find though in regards to expenses in your business, your real estate business expenses will be almost exactly the same as Nigel's, which will be almost exactly the same as Justin's, almost exactly the same as Joel in your fixed expenses, not your variable expenses, fixed expenses, your realestate.com, your subscriptions, your fundamental subscriptions and so forth will be exactly the same. What will vary is your rent. What will vary is wages depending on how you structure. So if you have a director's EBU, which you do, your wages for your team, Kai and Abigail, and obviously yourself, that's an EBU. If you're generating $1 million and you're paying out wages of $100,000 each to each staff member, your EBU is generating $800,000. Take off your expenses, the variable expenses to your landlords, to your vendors, and let's just pretend you have a cost of sale. Say you do 50 sales to do your $1 million, and each sale is costing you $1,000. Client gifts, some throwing in for some marketing. So your director's EBU is giving you gross income of $750,000. It's pretty simple. It's not over complex. Then you look at your property management division and say you have 200 rentals, and just say that revenue is coming in at $400,000, and you've got 2 full-time employees costing you $160,000. You're left with 240, and say you've got another $5,000 a month tops in property management expenses, tops, the most. Right, another 60, you're left with 180 in that department. And then you move over to your sales agents. And whilst you don't have any, let's just pretend you have a sales agent that's on 500,000 on a 50-50 split, and it's 250,000 coming into the office, but you're paying for his marketing or her marketing, paying for the cost of the sales that they do, the $1,000 for the client gift. That 250,000 might go down to about 150. I'm just saying. So in your marketplace, Stu, your average com's 13 grand, 12,000. There's no way he's going to have a cost per sale of $1,000. He'd be going really backwards. It should be about $400, $300. Does that make sense? Out of pocket. And it all depends on your market. So then you add those 3 things together, and I've probably just worked out you're going to be close to 800 grand. So then when you look at these 3 profit centres, you go to yourself, okay, how do I make $1 million? Say that's your goal. And you've got these 3 profit centres. You start structuring it. But then if you have a lifestyle change and you say, hey, I want to get off the tools, how do I replace that $750,000 of gross profit that's coming into my business? And if you know each agent's bringing you in, say, 250 for the argument of the maths, you need 3 agents. Does that make sense? Yep. So, again, and you only do this exercise once, right? And I'm happy to sit down with anyone just to really nut it down, get to understand it, so you can make really good decisions about how you want to grow your business. Really good decisions about where the profit is coming. But not only, and we'll talk about the profit, sustainability is so important, and we'll talk about that in the next few slides. Okay, so we need to track performance with key metrics to drive data-informed decisions. And I see very few agents do this. Property types mix. Again, yesterday, we had Sahil, who was big on apartments. So his property mix was apartments as opposed to most agents of residential sales. So again, you need to understand transaction volumes, your buyer type, your seller type, your tenant type, your landlord type. It's really, really important. Thanks, Maria.
There is a bottle behind you.
I know. Turnover rates. Turnover rates are critical to actually understand. This one should be done annually to give you a really good indication of how your turnover is going. Average sale prices, average commission rates, available GCI. I mean, that's a big one. I did a business planning session with someone many, many years ago, and weren't part of our organisation. And they were signing up to a major franchise, and they were spending about just under $1 million on an office fit out. I said, okay, well, that's pretty big. What are you planning to do in GCI? Oh, yeah, we're looking at doing 5 million. Fantastic. Which area? They told me the area. And I said, I pretty much know that area. There's 5 million. And I've looked at it. And I said, mate, the whole area doesn't even do 2 million in GCI. Like, you're spending $1 million on a fit out. Where's the other 3 million? And I said, and you're pretty confident to get 100% market share? Like, I haven't seen it yet. So these fundamentals are so good. Joel's talk yesterday, there's a thing called the law of diminishing returns in business, where you get to a point where any extra that you do is either not worth it or actually you go backwards. And it's so true to identify that. And when Joel said, music to my ears, where he goes, we're at 12 people, correct me if I'm wrong, and we're probably going to be at that point, and I just want to nurture these ones. That's someone who knows what they want, truly knows what they want. They know the numbers. He's not going to make $20 million profit out of that business. It's impossible. But he knows that. Does that make sense? And if you want to make $20 million profit, you need to restructure it. You need to look at different metrics. So again, competition mix, property management, and when will you be profitable in property management? Now, I love Wingman and I love Jonathan Bell. Absolutely, it's so inspiring, May's session. But what frustrated me the most is when I talk to our Queensland team and our Western Australian team who are doing property management, and I feel sick because their management fees are double ours, right? Double ours. I just gone, and that extra 2, 3, 4% they get per month per property is all bottom line. So when I compare my business to someone else's Queensland business in property management, we're miles apart, like the other ends of the spectrum. To the point, when will you be profitable is a really good question to ask yourself here in Melbourne. I won't go on a rant about Melbourne. Every state has its own variables. Okay, so moving forward, some profit fundamentals. I've only got a few minutes to go. Profit fundamentals. Expenses, fixed and variable. You must be responsible for your own expenses. I fell into the trap just once and it cost us dearly taking our eye off the ball. So we need to know they don't vary that much month to month to month, right? So you need to be paying all the bills yourself. I mean, maybe not physically put it through your Xero account and pay the actual bills, but approve every invoice. Get serious about this business, right? No invoices passes my hands until 2 sets of eyes see those invoices in our business. Vendor paid marketing recovery, critical. Too many people. Realty Assist, who's in the room, I am telling you, there they are. Guys have changed the game. If you are not using the services of Realty Assist, I am telling you, and I know there's some other companies out there, but they are the best. And I'm not saying it just because they're industry partners of ours, but we have tried them all. Cash flow and debt, 2 totally different things. I won't have time to go into it, but it's so important. When you have your P&L at the end of the year, this is one of the big things I hear from directors at the end of each financial year when they see their P&L. Where the fuck is the money? If I made so much, where the fuck is the money, right? So cash flow to debt. Cash flow is totally different to profit, and then of course your debt. Tax management, please. Just think you're going to be paying 50% tax. Just think like that. And don't spend the money. When you make $100,000, put $50,000 into an account, right? Lock it away so you can't touch it. Just spend your 50. There'll be lots left over in that other 50. And if you've got a really good accountant that knows how to do Division 7As and so forth, you can minimise your tax enormously and really build wealth. And your wealth creation can go through the roof. And let time do its thing. Okay, I'm going to go really quickly. Last couple of slides. A 1649 formula. productivity metrics, administration tasks, property management tasks, outsourced services. I want everyone to start thinking about productivity metrics. How productive are administration tasks? How productive are your team? How long does it take to do certain aspects of the business? Property management tasks, outsourced services. I want you to think of this formula, 1649. 1649 represents the number of hours an employee here in Australia is obliged to work after their holiday pay, after their leave entitlements, after their sick entitlements. It's 1649 hours. If you're paying someone a base salary of 80,000, please just add 25% to that cost base to allow for super, payroll tax, insurances, desk costs, and a big one that a lot of people are not talking about is the onboarding and offboarding costs. A simple formula. You can get into the detail, and there are people who use it in detail, but just do it like that. When you do that, that 80,000 suddenly becomes $100,000 annual cost to your business. 100,000 divided by 1649, if you get 100% productivity from everyone, is $60.65 per hour. So when you start thinking like that, people like Wingman sound very, very, very attractive. Outsourced services, extremely attractive. Even when you start talking about your property management temps who charge $75 an hour, you look at that and you go, okay, when they come in for 5 hours, the temps, and you need to have those temps, right? From time to time, people say, oh, it's so expensive and this and that. And I think, well, if you do that, if you work out this formula, it's not that expensive. Does that make sense? So you can make really good decisions based on that knowledge. So, and understanding that's at 100% capacity. If it was at 80% capacity, which let's be truthful, I think it's very unrealistic as directors and employers to think that an employee can physically work 100% of the time. That's impossible. We don't do it ourselves. So we can't expect our employees to be 100%. So be very mindful of that. Make some really good decisions on that. Okay, last one. Optimize operations to enhance client relationships and scale sustainability. This would have to be one of the big, big moments I want everyone to really think about their business. Client experience is the new growth strategy. But we're not just talking about our sellers. We're just not talking about our landlords. We're talking about everyone. We're talking about our landlords, tenants, sellers, buyers, admin teams, sales and PM teams, industry partners, service providers. Rethink and redefine your relationships with every single person that you touch in your business. Totally redefine it, because when you redefine it and you look at your service provider as your client, when you look at your employee as your client, when you look at your tenant as your client and everyone else, it changes the game. So suddenly volume is vanity and profit is sanity takes a new meaning, because to get profit, it's not about cutting your expenses. It's actually building a team that can actually sustain your business. So there's less turnover of staff, less turnover of industry partners, service providers. What a pain it would be to keep changing service providers because you want to get a better deal. The cost of change is phenomenal. Just a headspace, right? And remember, we want to build a business. I'll leave you with this. We want to build a business that it's like getting into your car to drive it automatically without thinking, to understand your numbers, to know that when you write $100,000 in GCI, by the middle of the month, I call that you're at dollar for dollar time for the balance of the month. So you know you're in profit thereafter. Okay, cool. Thank you, guys. I hope you got some value. And again, anyone wants to reach out and talk about Excel spreadsheets, just give me a holler. Thank you.
Thank you, mate. I told you, he's a Excel spreadsheet nerd. Manos, your phone's here. Do you need it? It's our accountant. I don't know what he wants. I don't answer him. He's $600 an hour. Manos goes plus. I went, oh. What's that?
I'll get my glasses on.
Fantastic. Well, how good am I going? Fair income, every single invoice that I put through my business, or our business, every single invoice either gets checked by my daughter or Manos. Life's tough sometimes, Tracy. Every single one. Anyway, he does really live and breathe it. And when he said that sometimes your accountants don't know, I can testify they don't know. Anyway, well done, Manos. That was another insightful session, and I really mean that. What you put up this morning was next level.